Hello everyone, Nikkei rebound today is April 10 and 2025 8:55 a.m. and the Nikkei index has rebounded to the 35,000 level. This rebound was driven by last night's statement from President Trump, who announced a 90-day suspension of tariffs on countries other than China. This triggered a massive rebound as for my 32,000 put options. It's as if there's died. The unrealized gain has evaporated. There's still some time left with Tuesday's session and Friday mornings falling ahead, but I want to reflect on this market movement and record it for future reference. Reflecting on the recent downtrend, this recent drop reminds me a lot of what occurred in August 2024, where a major dip also occurred. Honestly, I had anticipated a similar type of market drop that would eat up the lower week seen in the August decline. It was something I've been prepared for. Over time, I had actively been analyzing when and where to position myself. While I'll discuss my reflections on entry and exit later, my general strategy involved looking for opportunities to take a short position on the right moment. Patterns observed in similar downtrends, August drop. Back in August 2024, between July 11 and late July, the market began a steep decline. After a brief rebound driven by a Bank of Japan meeting, the market plummeted further, fueled by poor sentiment and structural issues. During this event, volatility in Japanese stock was low due to persistently stable conditions leading up to the drop. January-March 2025, I suspected that from January or potentially from the February's SQ session onward, bearish positions were strategically formed in preparation for further decline. After these bearish positions accumulated, a temporary rebound occurred to create favorable setup for option position, which ultimately led to sharp decline. This sequence of events remind me of the COVID-era shocks and other bearish trends, a well-known pattern where strategy often consolidation with. Prior positioning in spot market followed by option setup used to amplify movements at the last push. Lesson from this experience: one, range-bound movement are tough to interpret. For much of this period, it was hard to distinguish whether the market was forming a downside structure or was simply moving with a natural range. Interestingly, I maintained a bullish outlook until the very edge. For example, in March, I held call option until March 30 before switching to puts on March 31. And 2. Switching quickly between bases is key. In both August 2024 and this recent drop, I initially held on to calls but later switched to put. Also, part of me thinks this is an inevitability of trading. This highlights the need for prompt adaptability in adjusting position. Timing exists is the biggest challenge. When my entry strategy have become more refined, supported by analysis of market balance, data model, and fundamental factor, exists remain a point of weakness. And one reason for this is momentary or priori scenarios. Back in August, I failed to capitalize Monday for expansion. I took profit much too early on Friday and had no choice but to watch helplessly on Monday's market. Um, this experience led me to intentionally hold until Monday this time and while the work to extend beyond the Greek it reflection on the role of time decaying options. Time decay acceleration significantly in the final week of option expire, the finally Monday or early Tuesday. For instance, with that in mind, the ideal action would have be to take profit mechanically during this period. Um, my interpretation of execution candidate with usually large range indicated end of the trend was flawed. The candlestick size was smaller than August drop, making it harder to recognize them as signal of trend exhaustion. I ran too heavily on scenario like the Lehman crisis as a reference rather than considering the more recent precedents and the August drop. While history tends to repeat itself, markets evolve, often surpassing past events. In trading, time is the only factor remain universal, unbiased, and beyond human manipulation, and absolute. Unlike price movements or perceived market pattern, time is constant and provide a framework for decision making in hidden relying on time-based decision, such as liquidating position around expire week key timing, Monday or night or Tuesday morning, could have improved the outcome significantly. But I learned and the future strategy, exit strategy are critical. Even if entries are refined so diligence analysis prosper and mechanical, especially for options with significant time decay are vital. Being the mechanical and pre-planning exists around well-defined time endeavors, either error or to refine further, balance historical learning and recency. Lessons for the past are like volatility drive events, COVID, Lehman crisis, valuable, valuable but should be balanced with more recent market dynamics, which may better predict further movements, avoid overconfidence in models. My trend power model indicated further downside potential leading to overconfidence in continuing to fold positions. This reliance on data must be tempered with realities check against the currency signal become even more time oriented since time decay is critical in options. Aligning decisions strategically with time-based structure such as SQ weeks or daily close pattern provide a more considered and relational approach. Stick to the principle of timing rather than solely focused on price projections. Final note: this recent massive rebound reminded me of the importance of discipline in option trading, especially respecting the intrinsic value of time. While price movement can deceive, time remains an indispensable factor for informed actions. As I process this experience, I plan to doubt down on the principle of reflection time in my decision making move forward. The lesson for the August and recent downside provide an individual roadmap for refining my strategy. I will continue to pursue options trading while keeping these lessons at the forefront. Let's see the further unfold in the market from the day onward. Thank you for listening and following along with my reflection. Until next time, this market and social and analyzing reflection on your trading journey, capturing both success and area improvement. Thank you.